Hello, and welcome to the Bankers Tech Talk series, looking at all the things happening in the FinTech world. We've been tracking FinTechs now for 5 years, and you can see all the previous videos on thebanker.com/tech talks. I'm Joy Macknight, managing editor of The Banker, and with me this week is Bartosz Jaskula, founder and CEO of MergerLinks, which is a data intelligence platform which tracks M&A activity and also top bankers.
Hi, Joy. Excited to be here.
So can you tell me a little bit about MergerLinks, what kind of data you provide, and then, and also who's interested in your intelligence?
MergerLinks' ambition is to bring data science to origination and execution of M&A transactions. We do it by connecting M&A practitioners with data-driven insights. Just to give you an example, we help management teams and entrepreneurs connect with the advisors most experienced in a certain sector or geography. We help bankers find most likely bidders for the assets they are selling, or we help our users identify people behind transactions of their interest or the ones that have close relationships with particular firms. The fact that we provide people-level insights lets our users conveniently connect with each other and which essentially create business opportunities for our users.
Who's interested in this data? And then also, how do you differentiate yourself from your competitors?
MergerLinks connects thousands of M&A professionals globally. Over half of our users are entrepreneurs, corporate executives, and investors, with the remainder being M&A-focused advisors. This balanced mix is very important for the origination opportunities that our platform brings and is unique to MergerLinks. We prepare research and league tables featuring leading M&A professionals, which shows the breadth of our research and insights we can provide to our users. And at the same time, focus on the actionability of our data, which is set us apart from our competitors.
And you were previously an M&A banker at Rothschilds. What made you decide to start your own business?
Sure. In my banking life, I realized that M&A is a people business built on credentials and relationships of deal makers. At the same time, I realized that M&A is a very opaque community, and none of the existing products really allowed me or my clients to identify people on the basis of those two factors. And this driven me to create a platform where anyone who is looking for a corporate finance advice can find independent information and connect with the right people.
And how would you say that the COVID-19 pandemic is really affecting M&A globally?
Uncertainty kills appetite for M&A. At a very fundamental level, COVID pandemic makes it very difficult to assess business plans, which makes appetite in any new deals quite sketchy. When it comes to already announced transactions, pre-COVID valuations are difficult to attain, which makes the deals fall through. The fact that in April we had more deals being pulled than announced just gives you a sense for the scale of challenges deal makers are facing these days. I think the pandemic will drive deal makers to leapfrog stages of M&A evolutions in fairly short order. We believe that at the end of, given that we have an end of the M&A cycle and the prolonged lockdowns will be a push for efficiency in M&A processes, where digitalization has a very strong role to play. Given that in the current situation it's difficult to build and develop client relationships, I think the current situation will favor deal makers with the strongest track record and most robust and deep client relationships. We certainly believe that in times like this, access to data-driven insights will be paramount to deal successfully.
And my last question is really around how you think the pandemic is going to make an impact on the FinTech community, especially in London.
Much has been said about COVID impact on businesses. I think two aspects are particularly important for a FinTech community. First, that relates more broadly to tech space in London more broadly is funding. We are currently in a risk-off sentiment, which makes the fundraisings for innovative businesses harder to execute. At the same time, prolonged sales cycles put further pressure on balance sheets of fintech businesses. On the other hand, which is point more fintech specific, is that in the times of distress, clients and asset managers take a closer look at the financial standing of their counterparts. And I fear that here, given fintech businesses are slightly less established than some of their traditional peers, they may be unduly penalized until the recovery is in full swing.
Well, thank you so much for your insights, Bartosz. And thanks to our audience for listening.
Joy, thank you very much. Pleasure to be with you.